Welcome to DeepTech315. Our first topic this week is an encore for the Nvidia preview. This is such a big topic, so important to the overall perception, near-term perception, how investors are going to think about the AI trade. It is worth fine-tuning our thoughts going into them reporting. Of course, that's going to be on August 28th. And just taking a step back on the setup, if you look at the stock over the past month, it's up 4%. Which doesn't really tell the whole story since it kind of had that micro crash, that 13% drop in the NASDAQ. Shares of Nvidia are up 30% called over the last 3 weeks. So I've seen this big surge back. Obviously, there's a lot of optimism regarding the quarter. And as I'm going into this, I'm less focused on actually what the print is and what the guide is.
I think there's maybe two ways to look at it. There's what's the stock going to do literally after they print, because everybody wants to know that and they want to play that. And there's kind of the assumption that that is going to be the telltale for maybe the next 3, 6, 12 months. And then it's like, actually, what are they saying about the next 3, 6, 12 months? I think those are the two things you need to parse out. In the short term, I think the stock being up 30% in a month, it does create a difficult setup going into the quarter. Just expectations by price measure have to be high because of what the stock has done. There's fast
But
money
it's
in
not
it.
at its peak. Back in early June, it was 5% higher. We're close to it, but this is not at the, we're not at the pinnacle of, I would say, Nvidia optimism. We're still not quite there. Close.
We're not, but I think when you see a stock, especially a stock that's a $3 trillion company, it's one of the biggest companies in the world, up 30% in a month, what that tells you is there's a lot of fast money in it. And a lot of fast money, sort of by definition, they're not necessarily paying attention to everything going on with the story. And I think the important thing going into this earnings, what we talked about last week, this potential Blackwell delay that has been reported, rumored, soft denied by Nvidia. If that is real and that does come up as a conversation point in some way, the people who are fast money that aren't paying attention, I think that's the risk in the very near term, but I don't think the demand picture has changed at all in the longer term.
So that the rumors, again, as Doug said, they haven't officially confirmed this, but let's say it is in fact true. We do believe it is true. There's going to be a slip here. It probably pushes things out. What do you think? 3 to 4 months we're talking about?
I think that's right. Yeah, it's kind of, think of it as a quarter roughly in terms of the push out. It seems like based on some reports that they probably can get some limited production out the door still later this year, start to deliver on some of those orders. And they do have hundreds of thousands, right, of unit orders from the Microsofts of the world, the Metas, the Googles. So there's huge demand still for the Blackwell chip. It's just a matter of how quickly they can work through some of the yield issues with this new technology they're using.
And given just the tailwind of build out for AI, any pain in 2024 is to the gain of 2025. So recapping, the street's looking for about 100% revenue growth in calendar 24, dropping to 38% in calendar 25 and down to 16% in calendar 26. So we could see that 100% in calendar 24 be 90% or something like that if this ends up slipping. But then it's just going to be trading from one year to the other. I don't see they're not going to lose business over this Blackwell chip. And we were talking earlier, you brought up a dynamic that I hadn't thought of around just the H series and why that might actually be a good thing in the near term if Blackwell slips.
Yeah, the Hopper series of chips carries a higher margin, or we expect it to carry a higher margin than the Blackwell chips. And so
Just because the yields
ironically,
are lower on the initial runs of Blackwell?
the cost of production's a little bit lower relative to Blackwell. And so, your gross margins are a little bit higher. What you could see is that there's some earnings tailwind here for the next, let's say, quarter or so, right? If they end up selling a little bit more in the H series chips before the B really ramps up.
Love it. So our takeaway is that still continue to see some risk related to what happens in the near term, the perception around this Blackwell slip, but it doesn't change the big picture is that we're still very early in what AI is going to do over the next 5, 10, 15, 100 years. And NVIDIA has a pole position within that. And so for another episode, we can talk about, how long does NVIDIA continue? We do own it in our fund, and we think this is a great place to invest in AI. Jump to topic number 2, which is related to Apple and the European Union. They are continuing to kind of dance around getting compliant. It started back last, I think January is when it officially, the kind of back and forth started, and Apple's made some revisions. The EU has come back and said, no, not good enough. And this week, Apple announced that they're going to be making some more significant ones. Caught my attention, and this again is for European users. But specifically, as you can now you will be able to delete native apps. So this would be like the music app, Safari, a payments app, the phone app, all these photos, like these apps that you could never delete in the past. Now you can delete them. You can delete the App Store, Apple's App Store, and download its a third party app store. And so feels like I got a view. I'm going to give you the mic here first on what this means for Apple.
We've talked about this evolving reality of the openness of Apple's platform for a while. And I think fundamentally, set aside control of the store, who should be able to do what. I think fundamentally, this is the direction that the world is going. This is the direction Apple's going to have to go.
Regulators are pushing them to go.
Well, I don't think it's going to stop with Europe either. I think Europe tends to be kind of on the leading edge of regulation. Whether that's a good or bad thing, we could debate separately. But I think that other countries around the world will probably see this. And I wouldn't be surprised if we see similar outcomes over the next several years. The reality is this, now there will be competitive app stores like Epic's Game Store. They talked about launching that last week. It has a 12% take rate, right? So lower than Apple's. What do I think consumer behavior will actually do?
That's the question.
Mostly, I don't think it's going to change, but I do think that if some of these other app stores that have lower take rates and the big developers are going out in market and advertising and saying, hey, go download App Store X, you can get our products cheaper. I do think there is some risk that some consumers go and do that, right? How much money can you save is really going to be the question that changes that dynamic. If it's a lot, maybe consumers do it. If it's only $1 or $2 here or there, they probably just stick with Apple.
I think it's the latter. I think it's going to be $1 here or there. And I think that kind of the headache for kind of going outside of products that they know well. And I think that most consumers generally trust, and I think there is a security piece to this that is a benefit to continuing to use Apple's apps. I think that this is I cannot, it's hard for me to imagine a sea change. Yes, they'll check the box for regulators. They will allow these third-party app stores. I will go and if it does come to the U.S., I will go and play around with it, but I don't think it's going to ultimately change people's behaviors. People are just get caught in a rut, and or said a better way, I think they just get into these habits, and so it's tough to break.
I think it ultimately will depend on, can you get apps on these third-party app stores that you can't get on the App Store?
Right.
That's variable one. And then variable two is, how much can you save?
But the app developers won't do that. They're going to say, like, if you get...
Some will. No, Epic already has. They pulled Fortnite. I mean, that's a big one.
There's like a holy war going on there. But imagine your average developer. You can go and say, I can allow my consumers to buy my product for 20% less if I put it on this third-party app store and have 10,000 people look at the app, or I can have 400, 300, 200 million people look at an app through another app store, have access to it.
I think there's something worth considering there that's really important, though. For some, average developer, 1,000% I agree with you. But if you're Fortnite, if you're Netflix, if you're Spotify, you're already doing workarounds.
Right.
That's where I think it becomes more interesting. Match, right? Or Tinder, all these apps that are trying to avoid those fees. That's where the battleground is. That's the question.
Yeah, it's the big ones. It's the 10% that probably account for 30% of App Store revenue. And that's a good one to check. Yeah, like if people end up saving on a subscription basis $5 a month, and I'd be curious to see, we got to look into what the pricing of how Fortnite, if they're keeping the money or they're giving it back to customers or splitting the difference.
I believe they keep it, but relatively, if you're only charging the developer 10 cents instead of 30, then the dev might they might share it back to the customer with lower prices, or
I see.
maybe the dev keeps it.
Yeah, I
The
was gonna
dev
say,
might
but the
keep it.
dev keeps it, then they don't have that cost advantage for the consumer. Let's jump to our final topic, which this one's been a painful one for me. As many of you know, I'm a big believer in electrification. I just think it makes sense. It's not a political statement. It's not a statement about the globe and kind of the health of the globe. It's a belief that electrification is just a better way to get around the efficiency of an electric motor versus a gas motor, all the pieces that layer up into getting that to happen, the performance of an electric vehicle, the maintenance, all that. So I've been, as many of you know, a longtime believer in this. I just keep getting, we'll call it slapped in the face here with negative data points over the past year. And I'm calling this the dead of the EV winter here, with the two announcements this week that Ford is going to be delaying a new SUV that they've been talking a lot about, electric only SUV, kind of switching it to that factory to more of a hybrid. And then Stellantis also talking about a battery factory that they are going to hold off on building out, and they're still committed to doing it. And so the number that really jumped out this latest kind of slew of updates was Ford saying that their CapEx related to EVs is going to go from 40% to 30%. And so as I put all this together, I think the basic question comes down to, well, first of all, is there a debate whether EVs are going to be the future? Do we need to do that? Or is the debate, what's the pace of adoption of EVs?
I think the debate has always been the pace of adoption, and we've long
Our
debated.
debate has been. Do you think the market's debate is that,
I think it's probably, more around pace. I think most people would probably agree about the advantages of electric. I think those are widely known and even, I would say, accepted. I think the challenge, though, is, in venture investing, which is something that, we really started the firm around at Deepwater. We always talk about this idea of, is the product 10x better? Like 10x better demands people change their behavior. Go back to the Apple App Store example, right? If you're saving 10 cents, nobody cares. But if it's an iPhone and you're used to a BlackBerry, I mean, you use the Steve Jobs ice water to an Eskimo in hell, right? Like that is 10x better. And I think the fundamental issue, and maybe where we haven't agreed, is I think electric's better. I don't think it's 10x better. I think most of the market also agrees it's not 10x better. There are advantages. There are also disadvantages.
Agree with all that.
In particular, I think more recently what we're seeing in disadvantages is, particularly in the US, humans want larger vehicles, and EVs just aren't as optimized for that larger form factor yet. That has been a challenge. And so that dynamic, that kind of like headbutting, I think that's really what we're seeing kind of play out here, is what people want, how much better is it, and what sacrifices people are willing to make.
So by next week, we're going to come out with our updated EV adoption numbers, and so we'll be able to talk about that on our next Deep Tech. So more to come on that front. But that piece around large versus small vehicles, the Journal did a story about the hastening demand for EVs, and highlighted that the big car companies essentially pushed too far into what they felt was the moneymaker, which was the big cars. Think about the electric F-150, think about the Cybertruck, but there's a dynamic around the battery and the yields that happen when you get a big battery. Big battery can take you further, but it does have a lower yield to it just because of its weight. And so that dynamic has impacted the availability, the affordability of these, because the battery is about 40% of the cost of the vehicle. And so the conversation around EVs, kind of previewing what we're going to talk about next week, it's going to be the growth vehicle is going to be, or the growth market, the segment is probably some of these smaller vehicles. And that is, I think, what you're going to see a lot of companies, Tesla included, really staking their EV growth claims to over the next few years. So we're going to wrap here. Next week, it's going to be action-packed. We got those EV numbers, and of course, can't wait to be recapping and giving our takeaways from Nvidia. On behalf of Doug and I, bye for now.